Welcome back to the channel. My name is Steven. I'm a pharmacist and I own 52 units of real estate. So today I want to talk about why the real estate market is frozen for both single family homes as well as multifamily homes, which is 5+ units. So first, let me talk about why it's frozen for single family homes. So I own single family homes in California. I own some in the Bay Area. I own some in Los Angeles. I own some in Orange County. I have one in Huntsville, Alabama. And what I've kind of seen is because interest rates are so high, so a good interest rate today is like 6.5%. Back in 2017 to I think 2022, you can get, a 4% or less interest rate. But, today it is, averaging 6.5 to 7.5%, depending on your credit score, depending on your financial situation, depending on the incentives, or if you buy down. On my primary here, I got it at 6.5% through Lennar, so that was great. But I've noticed in California, the real estate seems very stagnant, and as well as Huntsville, Alabama. And let me give examples. So I feel like a lot of people that own homes, prior to, during COVID, they locked in a low interest rate, right? People have interest rates of 4%, 3%. My lowest is 2.75%. And what happens is, even though people want to maybe trade up, they don't want to sell because they have such a low interest rate that you probably won't get again. And if you were to sell the house, you'd have to buy another house that is at a higher price, a higher property tax, and your interest rate is going to be higher. So it's kind of like a triple whammy. So because of that, people are not really motivated to sell, which is why I love buying new construction. Side topic, but when you buy new construction, they're always building, right? Like in the community I'm living in, there's like 8 phases, and each phase they sell like 10 to 15 homes or whatever that looks like for each phase. So I feel like, because people are too afraid to sell, inventory is low. Your inventory is dependent on like builders if you have it in your area. Some areas don't have new builds. Otherwise, you're just stuck depending on people who are just selling for maybe, reasons, whatever that is. Maybe they have to move for a job, maybe a death in the family, whatever that looks like. So because of that, because of, people basically locking in their low interest rates, not wanting to sell, because of low inventory, because of high interest rates, I feel like the housing market is very stagnant. Like people are not overbidding. Like during COVID, I remember people would overbid like crazy. Remember those days where you get like 20 offers at asking price and it'd create a huge bidding war, and people can afford more because interest rates were low, right? So if interest rates are lower, you can afford a higher price. Versus now, interest rates are higher, you can afford less house, but houses haven't gone down. So I feel like single family home in California hasn't really gone up, hasn't really gone down. It just kind of stayed stagnant. And that's what I kind of observed through the values of all my single family homes that I've owned. It was pretty stagnant this past year. Like I said, didn't really go up. Some went up a little bit, some went down a little bit, but overall I feel like it's pretty stagnant. So if interest rates do drop in the future, that's when housing prices will go up again. Right? That's when you're going to start to see overbidding. That's when you're going to see people maybe motivated to sell because they want to trade up to a bigger house or they want to move somewhere else. But from what I've seen, people are very stagnant, and I don't blame them, right? Like I'm not motivated to sell my investment property that locked in a 2.75% interest rate. Of course not, right? I'm only motivated for my current property because I'm at 6.5%. So I've seen this also in Huntsville, Alabama. Like I buy new builds in Huntsville, Alabama, and even the new builds today. So I bought my new build for about $260K back in 2021, and I think it's worth around $330K today. And there's still new builds that are being sold for maybe about $280 to $330K range. 3 years later, and once again, I think during this time when the housing market's frozen, interest rates are high, I actually think it's a great time to buy new builds because new builds, a lot of the builders, they give you incentives, right? Like end of the year, it's Q4 of 2024. They want to hit their goals. They want to get rid of inventory. So they might drop the price. They might give you incentives. It's nice, right? Versus if you just buy a home from someone else, maybe they don't give you, they're not going to give you as many breaks or whatever, or incentives. And it's an older home that you have to fix up. So that's what I'm really liking about just new builds in kind of the stagnant, frozen market. So to kind of summarize, single family homes, prices are neutral because of high interest rates. If you want to buy single family homes, I suggest you buy new builds, whether it's for yourself, whether it's for investment, because you will get incentives on those, and it's less maintenance and it's less competitive, right? You just literally, if you use your preferred lender, you might get a lower interest rate. Like me, like I used Lennar, and I got a 6.5% interest rate. So it's not bad, it's not good, but for this time, it's not bad. So now let's move on to multifamily. So for multifamily, I feel like multifamily is stagnant or slight declining, and let me explain. So, because interest rates are higher, the cap rates are going up. So if you look at the value of multifamily, it's the net operating income divided by the market cap rate. So if your interest rate is 4%, then maybe your cap rate might be 8%. But if your interest rate goes up to 7%, then your cap rate might be going up to 10%. So if you have your net operating income, even if it's exactly the same, if your NOI is $50,000 and you divide it by 8% versus 10%, obviously if you're dividing it by 10%, it's worth $500,000, which is less than an 8 cap property. So multifamily is going down, right? So, it's making it more challenging, and it's making it harder on how banks underwrite the deal if you're going based on the income approach. So, I still feel like, once again, multifamily, 5+ units, it's very stagnant. Like me, I locked in great interest rates, 7-10 year term at 4% interest on my 26 unit, and on my 20 unit, I locked in 6.5, not that great, 10-year term as well. But like I said, if interest rates, I'm hoping in the next 7 to 10 years, interest rates drop to below 6.5, then I'm gonna do a refinance, maybe pull a little bit of money, right? So, I just kind of feel like this is weird, awkward standstill with single family and multifamily. And ironically myself, I've paused for the past year, right? I haven't bought an investment property in the past year. I bought my primary residence, a new build, but in terms of investments, it hasn't done that because I know now, given high interest rates, I have to do a higher down payment, right? So if you have a higher down payment, by all means, you can still buy today, because if you have a larger down payment, you have a smaller loan, you can hit your debt service coverage ratio. So, for me right now, I'm in a period of stabilization. But if interest rates drop and my properties start going up in value again, my single families go up, my multifamily goes up because, interest rates drop, cap rates will drop, values will go up. I can do cash out refinance, leverage a little bit more, pull out some money, and go buy more properties that are more likely to cash flow because of lower interest rates. So for me, I'm kind of stuck in this weird waiting game. So I feel like the real estate market's frozen, right? Single family homes are frozen, multifamily homes are frozen because of high interest rates, and I'm frozen, right? So when interest rates were low, I was taking a lot of action. I was buying a lot of deals, right? But it was a lot of crazy overbidding. So like I said, pick your poison. So if you have money now, I'd recommend buy some new builds, buy new build single family homes. If you can, you could find value at off-market multifamily, or probably the 2 routes I'd go. And if you can get a good multifamily deal, buy it right with potential to raise the rents and value add through renovation. Or if you can buy new builds at a higher interest rate, minimal maintenance, it's a good price, instant equity, then you could, buy that. And then when interest rates drop, hopefully, to whatever, 4.5, 4%, then you can do a cash out refinance, or just do a rate refinance and lower your rate. So these are my thoughts on why the real estate market's frozen based on interest rates. And, hopefully this gave you some value. Let me know if you have any questions. Love to answer your questions. Otherwise, if you're interested in buying your first multifamily deal, check out the mentorship program. Otherwise, please like, comment, subscribe, and hope to see you in the next one. Thank you so much.